Leah Bennett, one stock you like at South Texas Money Management is Hologic. The mammography machine maker is up over 30% so far in 2015. But what's the catalyst to take it higher?
Thanks so much, Greg. Hologic developed the first version of a 3D mammography machine, so it allows for the detection of breast cancer at both an earlier stage and allows for less false positives, which basically is very friendly to the consumer, to the patient, and also is very beneficial to hospitals because there's less needle biopsies. They're very early in the launch of this product. What's exciting about it is the more products they're able to sell, and they've been able to have high adoption at some of the thought leaders such as MD Anderson and the Mayo Clinic, the more they can sell software upgrades with it. And the software upgrades carry 90% gross margins. So great outlook for Hologic.
And you're also bullish on Marks & Spencer. Now this retailer is also having a great year. It seems like their styles are in fashion. They're doing very well with their suede products. So tell me, what takes Marks & Spencer higher?
Sure. This is a value stock that we think is really interesting. We actually like the recovery in Europe. It trades at a very low price to cash flow, has a nice dividend yield. Marks & Spencer has not done a great job of communicating their quality proposition to consumers in the past. And this last quarter was very exciting. For the first time, you're starting to see sales at their general merchandise area start to pick up, and gross margins are picking up. So they're selling more at higher price points than they have in the past. So this is the best quarter they've had since Christmas of 2010. So we do think they finally have trend right, and that should continue to be the case going forward. More suede skirts sold.
All right, and then finally, you're bullish on Sensata Technologies. This is a Dutch sensor manufacturer, and sensors are going into everything, whether it be cars or even elevators, computers of all sorts. But the stock came down a little bit when they only met estimates in the first quarter. So were the expectations too high?
That's a great question. This is a really interesting company. There was a little bit of an inventory correction, which is what caused sales to not beat expectations during the last quarter. But if you look at what's going on from a regulatory standpoint, a lot more regulations are going into place in both Europe and Asia Pacific regarding fuel efficiency and also autos being made that are more environmentally friendly. So the estimated market for Sensata's products was estimated to be $6.5 billion in 2010. Today, it's estimated to be almost $18 billion. So that market is growing at a very high rate.
All right. Well, thanks a lot, Leah.
Thank you so much, Greg.
And thank you for watching The Street.